Welcome to Growth and Inspire, where we examine topics that make us feel inspired and grow. I'm your host, Bonnie Yam, and we will be posting frequently on topics to help you run your business better. It can be issues involving new regulations, taxes, planning for business growth, or how to run your business more efficiently. Whether you're an individual, a C-suite member of a company, this podcast is for you. We hope to bring you insights and discussion points, drill down on complexity to make it simple. Join us on this journey as we will have lots of interesting guests such as business consultants, insurance experts, tax and finance professionals. And don't forget to subscribe and leave us a review if you enjoy what you hear. Now, let's get started on today's episode. Today, our topic is New York State Secure Choice Savings Program. And our speaker is Michael Van Husen from Paychecks. Hello, Michael. So happy to
Hi.
have you on our podcast. Before we start, can you tell us a little bit more about yourself and your company?
Yeah, thanks, Bonnie. Thanks for having me on today. I'm happy to be here. I do have to get out like one compliance disclaimer before we start that I want to begin by saying I'm not a tax or financial professional, and the information I share on this podcast is informational only and should not be considered financial or tax advice. Additionally, I'm not affiliated with the podcast, and the views are my own. So now that we got that out of the way, Bonnie,
All
again,
right. Thank
thank
you
you
so
for having me here. I'm a regional wholesaler for Paychecks retirement plans. I cover the state of New York. I've been with the company 17 years, most of that time spent in the retirement division. Paychecks is a payroll and human resource management company. So we help our clients with that area of the business so that they can focus on success and growth.
Thank you so much. That is an expert, I thought. Anyway, so let's just jump right into it. Can you, Michael, explain what is the New York State Secure Choice Savings Program?
Sure. According to the Pew Charitable Trust in 2020, only 67% of industry workers had access to a retirement plan. That number has grown to 73% in 2023, but the government wants this number higher. So finally, the state passed the New York State Secure Choice Savings Program, mandating any employer with more than 10 employees over the previous calendar year and have been in operation for at least 2 years to either offer their own type of retirement plan or get in a state-sponsored Roth IRA program.
Interesting. So how about, can you explain what is the state Roth facilitated IRA program? How is it different from the regular 401k?
Sure. So the state-sponsored IRA will be Roth with no pre-tax option. So that's a big difference between 401k and IRA. Additionally, the amount that an individual can put into an IRA is drastically different than a 401k. So typically in a 401k, you can put as much as $23,000 of your income away. In an IRA, the cap is $7,000.
Mm.
If you're turning 50 or older, you're allowed to do an additional 500 into the IRA or an additional 7,500 into the 401k. So lots of reasons to do 401k over the IRA.
Yes.
But those are the main differences. Also, in the 401k side of the house, you can do employer contributions to get even more money saved for retirement, such as profit sharing and match, which are not permissible in the IRA.
There's a lot more flexibility and the amount of money that you can put in the plan, like 3 times as much. So, I mean, yes. So, yeah.
Right.
So I also hear to drive more people to start saving in retirement savings plan, there are some benefits, some credits for the government. Can you kind of help us go over some of them?
Sure. Yeah. Secure 2.0 passed probably, I think it was December 2022, and that increased tax credits available to businesses that start a new retirement plan for their
Free money.
employees. Yeah, free money, not deductions, not tax deductions, but tax credits. And it's up to $5,000 over the first 3 years that they start the plan. Most new plans won't cost a business $5,000 a year. So you're talking about recouping most, if not all, of your initial investment over that first 3 years.
Mm.
And guess what? If you get into the state run IRA program, you don't qualify for those credits.
Yep, you miss out on the free money.
Yes.
So I also hear that they want sometimes like they get company contribution. You might get tax credit, the owner. So how does that work?
Yes, so you can get tax credits for matching employees' contributions, and it's that tax credit scales down over time. But initially, it's $1,000 per employee for that tax credit, and then an additional $500 credit if you add auto enroll. So there's a lot of different options to get more money. And what the government's really doing is obviously trying to incentivize businesses to have their employees give a channel for their employees to save for retirement.
Save, yeah, save as much as you can, and then if you sponsor the plan, will help you more money. The set of fees offset that, and then if you match their contribution, I also can help you, and then get them to auto enroll so they don't have to think. Whatever comes in, you take some and then start saving. You also get some more credit, so they keep adding up. 5,000 here and here there. I mean, it can be a lot, so I think that's wonderful.
Yes, exactly.
Now, is there any penalty? Is there any penalty if you don't start a plan and you don't join the state IRA?
Yes. So the proposed penalties are $500 per, I'm sorry, $250 to start for the first year of non-compliance per employee that's uncovered by a retirement plan. Then if you fail to set up a plan or get in the state run plan the following year, they're going to increase that to $500 per uncovered employee. And then by the third year, $1,000 per uncovered employee that you either don't get in the state run IRA or offer your own type of retirement plan.
Well, that's terrible. Instead of getting credits, you get fines and penalties. So
Exactly.
yeah, it's like really no reason why not. Um, how about like what's the time frame? When do we have to get this started?
So the sooner the better, of course, I always like to say, right? But the state of New York moves at its own pace. Their proposed timeline to have their plan in place is December of this year, 2024. So if they keep to that timeline, I anticipate that fines would start to happen the following year in 2025 for businesses that don't get in the plans.
Not too actually you're talking about this is like the end of August. So just
I know.
not a lot
Yeah,
of time. It does take some time to set it up because
correct.
you need to get your payroll numbers together, file the plan, all that stuff. At least a good month, would you say, to just get all the paperwork together, right?
Yes, yes.
So the sooner the better. And then you don't want to wait till last minute because it gets very busy. Everybody's doing the same thing. So yeah, hop on it.
Right. That's a good point, Benny. Yes.
Yeah. All right. So I know a lot of business owners are very busy. So what if they don't have the time to do it themselves? Are there any other options, any other choices you can introduce?
Yeah, so I love our Paychex pooled employer plan. We call it a PEP, but that is probably the most turnkey retirement plan that Paychex offers. We provide a what's called a 316 service, which is basically we handle all employee notification requirements. That's the big one. Anytime they need to get a fee disclosure or notified that they're eligible for the plan, notified if they're eligible for a distribution, whatever the case, we're doing that on behalf of the client. They don't need to do that. We also file 15500 with the Department of Labor for all our clients on the pooled employer plan, so they don't have to worry about doing that. It's really a set it and forget it type of plan. Also with the payroll integration at Paychex, all they do is run their payroll and then forget it. The contributions feed. Employees control their own deductions from their smartphones. As far as a fiduciary, we partner with Mesero
I
to
know.
provide what's called a 338, so that the client is not the fiduciary on the plan. Mesero picks the fund lineup
Mhm.
and monitors those investments accordingly.
Yep, that's certainly an option for somebody who really don't have the time, the expertise, and it's best to just roll them into like a PEP, like a pool employer plan, and let other people worry about the complexities and just like
Yes,
figure out your day to day, make more money for your business. So that's great.
exactly.
And I also hear that, like if you have issues I mean, nowadays a lot of plan work with an advisor. So if you have questions, because this is so complex, so by all means, reach out to us, to me, or to Michael, because we're here to help. Definitely, we help. We want to be able to guide you. So that's it. Anything else to add, Michael?
No, I just want to thank you again, Bonnie, for having me on and giving me the opportunity to be on this podcast with you. I really appreciate it. And, I just want to encourage these businesses to get something set up for their employees and leverage financial professionals like you, Bonnie, to help provide advice for these employees.
Yep.
And that's really it for today.
Well, thank you very, very much. And if you enjoyed the show, please leave us a review. Your feedbacks help us reach more listeners and improve our content. Don't forget to follow us on social media and join us in our next podcast. It's going to be on financial planning for retirement. It's something we all want to know more about. So let's keep learning. Until next time, stay inspired. Thank you very much.